Chop, chop, all my young homie. All my young homie. Chop, 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 all my young homie. Chop, 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 chop.
What's up, everyone? Very much looking forward to today's session. Let's get right into it. Let's get right into it. I will get it started. Sorry, y'all. We are getting started right now. Got my Instagram friends going on. All right, let's get it going. I'm going to start with a screen share, which is going to be awesome. Today is action-packed. Today is like super action-packed. What's up, Steve? Good morning, Kathleen. What's up, guys? Got some NorCal friends in the house. Love it. What's up, LaShawn? All right, so with that, let's get this going. Let's get it rocking. We're just going to get started right away. So everyone, Michael Manatskanyan here, and today is going to be freaking sick. I'm going to provide you a masterclass on co-living, and not just talking about why housing unaffordability is making the co-living or rent by the room strategy more and more popular, what kind of the current market share looks like for the co-living strategy and how it's expected to grow. But I'm also going to be giving you a massive inside track as to why myself and other super investors have decided to focus all in on co-living rental properties, especially acquiring them creatively financed. I'm going to show you the numbers behind it, how you're able to fast track your path to financial freedom, how you're able to build much more massive wealth more quickly with less properties through this strategy. So I am very excited to get you guys going. This is a mini co-living masterclass, as well as providing you way more information if you're interested in potentially partnering with me on a really cool project that I have going on right now. Essentially, there's like 10 of us right now, and we're looking for a few more partners that want to invest at least $25,000, and that will allow them to buy 3, 4, potentially 5 properties. All of us will own those properties together. But more importantly, you guys will actually, like all of our partners, will actually be the ones deciding which properties that we buy. My team will be the one to get the investments, analyze them, bring them to you, and then we decide collectively, is this a deal that we want to own together or not? And your at least $25,000 investment gives you ownership to that entire portfolio of deals. It's really a cheat code when it comes to growing and scaling your own portfolio, so that you can, obviously grow towards financial freedom, which is going to require you to have solid experience and leverage that portfolio for your own capital raising. At one point, you're going to realize your own money is a big bottleneck, and you cannot buy the portfolio that you need just through your own money. You could if you had a extremely high paying job, or you already started off with a lot of money, or you wanted to spend as much time as possible to get there, right? I didn't want any of those things. As a military guy, I did not have a bunch of extra capital, and nor did I have a ton of extra time. Additionally, I didn't want this thing to take me 30, 40 plus years. The combination of everything I'm doing now is why I've been able to achieve financial freedom so quickly and at such an early age. I'm really going to go into all that for you guys. Okay, so with that, let me start with a little bit of screen sharing. Share screen. Boom. Awesome. All right, so I've further enhanced this project to make it, this presentation, to make it even more educational for you guys. I really want you to walk away with just a ton of information that you can implement in your own business and really understand why is it that I, Michael Manatskanyan, buy real estate the way that I do, and then why has it allowed me to get so much more results than the majority of people in the real estate investing space, and in a much shorter time frame than virtually most people that I know, right? And this is like not just buying deals, right? It's, in my opinion, it's pretty easy to buy deals using other people's money. More importantly, it's buying great deals that provide solid returns for you and your partners. You always going to be perfect? No, of course not. However, the goal is to maximize the amount of deals that you do that are great deals and are greatly beneficial for you and your partners. So with that, very simple intro. Michael Manatskanyan. If you don't know who I am, my real estate business is Coast to Coast Vets, and my education, mentorship, that kind of business is Super Investors, where I help other real estate investors scale towards financial freedom. I'm an Army veteran, engineer by trade, a chemical engineer, and I retired from all of that in 2024, so last year. And I've to go all in on real estate investing and to also help other investors. I started learning about real estate investing in 2018, but bought my first property in 2020. In May of 2020, my wife and I bought a 2-unit, lived in one side, rented out the others, or rented out the other one, and then did that one more time the next year. Since then, I've pretty much focused on the super investor strategy, creative financing, capital raising, and co-living to acquire over $22 million of real estate in right around 5 years. I own currently in over 12 states. I own co-living in California, Colorado, Georgia, Florida, North Carolina, Texas. I also own a lot of long-term rentals, mid-term rentals, short-term rentals, and some commercial rental properties in a variety of states throughout the country as well. A lot of it, the reason I've been able to scale so quickly, a big part is my ability to raise capital, but more importantly, it's not that I come from money, or I definitely do not. It's not that I have all these high income friends, or I'm from these like classes of wealth. Like that's the opposite of my entire journey. However, getting really good at finding deals, analyzing them well, presenting the information to people who are interested in partnering with you has allowed me to raise large amounts of capital to be able to build my portfolio. And yeah, you're going to get real inside track to that today. Additionally, I've done, I currently own over 70 rentals. I've done over 100 transactions where I'm basically finding deals for other buyers. So people who want deals, help find those deals and sometimes restructure them, make them better, and pretty much serve it up to them as a bird dog or, similar services. So with that, let's get into why have I, after all of this, especially over the last 3 years, why have I hyper focused on the co-living rental strategy? Co-living, very simply, take a single family house, take a property, and instead of renting it out to an individual, you can either rent it out by the room as is, or you can convert office spaces, living rooms, dining rooms, things like that into additional bedrooms. Typically, I'm finding 4-bed, 3-bath properties and turning them into 7 to 9-bed, 3-bath properties that are rented out by the room. This rental strategy is massively advantageous for real estate investors. I'll get into why it's beneficial for the economy and those that need affordable housing and all that. But I really want to focus. If you're watching this, you're watching live right now with me, you're an investor, right? Even if you're watching the recording, you're an investor. That's why you're here. You're spending your time and energy learning from me, learning through this presentation because you're an investor, right? And your goal, in my opinion, should be, if I want to get $10,000 or $20,000 a month, every single month for the rest of my life, how can I get there quickly and efficiently, right? Not some get rich quick scheme or whatever. That's not how investing works. But if the goal is, if you can get there in 3 years, 5 years, instead of 10 or 20 years, your goal should be to figure out how can you get there more quickly. That's basically what I've been able to do through my super strategy. The main component of that is the co-living rental strategy because it gets way higher cash flow. For every $100 I can get in a single long-term rental, I can get $1,000 up to $2,000 or more in a single co-living deal. I'm getting way more cash flow coming in each month, which means I need way less properties and to be doing this for a way shorter period of time to get that same $20,000 a month that I was seeking and I've overcame up to this point. So the cash flow is huge because that is the financial freedom that you are looking for. That is what you're going to pay your expenses with and never have to work for someone else ever again, right? That's like the number one thing for people when it comes to financial freedom. Additionally, not only do you get way more cash flow through a single co-living property than you do any other strategy, because you're able to buy bigger and better properties in better markets, since co-living primarily works in major cities, you get more appreciation benefits. Your properties are in better locations, right? Better states, better cities. They are better properties. Those properties appreciate more quickly than small properties or small locations or bad locations, right? Like properties in Georgia, or obviously here's an extreme like California, increase in value way more quickly than they do in Missouri, right? So because you're buying bigger, better properties in better locations, you're able to have your properties appreciate more in value. What that means is they're worth more. What that means is that you have more equity. What that means is your net worth is growing. So when it comes time to sell or refinance, to pull out that equity, you're going to have a much larger amount you can pull out, whether it's through a sale or refinance, and it's building your net worth along that whole journey. On that same point, because these properties are bigger properties and they are worth more, not only are you getting more cash flow because the properties are worth more, your tenants are paying down a larger debt for you, right? So if you're So, you're getting the income on the property. The first thing that you should be doing is paying off the mortgage, right? Pay mortgage payment, whatever that is, because the mortgage payment is larger. Your tenants are paying down a larger amount of debt for you. Once again, similar to appreciation where your property is increasing in value. Well, the biggest expense on a property, right? The thing is the loan. That loan is also getting paid down over time. Well, if it's a bigger loan, they're paying down a bigger amount of loan for you. Adding the spread is your equity. That's your net worth. That's what you get to tap into through a sale or refinance in the future. Your tenants are doing all that, and co-living makes this way more advantageous. Additionally, because you're buying larger properties and you're renovating them up front, right, to convert them to the co-living model, you also get way more tax benefits. Not only because it's a larger property, which you get tax benefits on, but because you're also doing these renovations and furnishings, which is also a tax deduction. Additionally, and I'll really break this down in the upcoming slides, you're helping solve the affordable housing crisis when there's literally no other solution out there right now. Like the other solution is people spend an insane amount of their hard-earned money, pay a huge percentage of that to go live in a single home, or they live in their car or they live in their streets. So like there is no great middle ground. That's what this rent by the room strategy allows for. Obviously, in theory, in a perfect world, everyone gets a house and the government pays for it, or I don't know, whatever the dream is for that, right? But that's not realistic. Like that's just not possible, unfortunately, at least the way our country is built, right? Just the way it is. We're at least helping solve this where no one else is, especially not the government. Bonus benefits that I'll talk about, because we are on the cutting edge of the co-living or rent by the room strategy, there is way less competition with other investors. And because there's less other investors looking at this, and because a lot of properties make sense for this, there's a lot more accessibility, right? For right now, you're able to go and get a bunch of deals more quickly and easily because it's less competitive, and a lot of properties make sense for this. So that is allowing you to then go build your portfolio in a shorter time frame, get all of these awesome benefits more quickly, and be done with this freaking rat race, right? Like it's not a rat race in the same sense as your job, but it's like once you're done with that phase of your life, once you've accumulated your 10, 20, whatever properties you want, and you decide to move on, you can, right? So the goal is to just get there safely and effectively, but get there and then just enjoy the rest of your life. You can be a weirdo like me that likes to continue working. I work a fraction of the hours that I used to. I still get a ton of results, but I'm more efficient about what I'm doing. But the idea is if you choose to never have to work again, you're able to do that. The goal should be how can you get there quickly and effectively? And the more accessible it is, or the less people are competing with, just the easier it is to do that, especially right now at this exact moment. And because we're buying bigger, better properties and better locations, it's much easier to find those property service professionals. What that very simply means is when you need property management, cleaners, handymen, contractors, all of that, it's a lot easier to find that in Atlanta, Georgia, than it is to find it in some tiny Missouri town, right? There's just more people available, more referrals, more investors, more people you can tap into to then get those services done for you instead of you trying to have to figure it out in a tiny population. And I say all this because that's where long-term rentals thrive, in these smaller markets where properties are worth $50,000 to $80,000 and they rent for $800 to $1,000 a month. So you do all that work in this little property, you get way less appreciation, way less debt pay down, way less tax benefits, and you get like a tiny amount of cash flow, $100, maybe $200 if you're lucky. All that work for that, and then it's harder to own and manage that property because there's literally no service providers. It's a freaking nightmare. That's why people don't do real estate investing and scale to freedom a lot of times through long-term rentals, because you're talking about hundreds of properties just to have a decent amount of money coming in each and every month to live your life enjoyably. And you don't need $20,000. Some people need $5,000. Some people need $10,000. Shoot, if you had $1,000 extra dollars a month coming in every single month, would that be a benefit to you and your family? At the same time, you also have appreciation, debt pay down, and tax benefits happening at the same time, building your wealth. I think $1,000 every single month would be very advantageous to a lot of people today immediately, right? But then you get to 5, 10, 20, whatever your goal is, you can work towards that. So the super investor cheat code, right? It's combining not just the co-living strategy that gets you higher overall returns and cash flow, builds your wealth faster, and is more accessible, but it's combining that with creatively financed investments. That further makes it so that I have even less competition, right? The person that is looking to buy properties on market traditionally is very different than me when I'm buying creatively. I get way better terms. I get to buy those deals with way lower entry costs, meaning I get much higher returns, much higher cash on cash return, AKA how hard is my investment working for me? I get to buy way more deals with that. If it's $100,000, if I have 100K, I have to put in 40K creatively or 100 traditionally, I can buy 2.5 times the number of creatively financed deals that I could traditional deals, right? I also get to increase my cash flow because my interest rates are lower on creatively financed deals. Some of my seller finance investments are 0% interest rates. Some of them are 2, 3, 4, 5, 6% because that's lower than the market average of 7, 8% for investment loans. I also get way more cash flow because I'm spending less money on paying interest on my loans. That means more returns means I get to achieve my goals more quickly, right? So I get to buy more properties and they perform better for me, which means I can buy even more deals because more deals make more sense creatively than they do at a 7 or 8% interest rate. Additionally, because I'm going creatively financed instead of through new lenders, it's massive because I eliminate the bottleneck of traditional financing. I don't have to submit all the same paperwork and get all these things vetted and tax returns and prove all these things to some guy who's sitting there and takes weeks to provide the underwriting and then challenges that. I don't have to deal with any of that. I could just go buy a property like that anytime I choose to. Means, once again, I can buy more properties more quickly. And because I have lower rates, once again, lower interest rates, my tenants are paying down my debts even faster, right? Lower interest rates on a loan means you're paying more towards principal, less wasted on interest, means your debt is getting paid down faster, adding to your overall ownership benefits. So combining creatively finance with co-living is literally the super investor cheat code. If you take it to the next level, the way that I do and I teach other people to do, then you're raising money to buy these deals, right? And that allows you to then buy as many as you freaking want, right? As many as, let me caveat that, as many as you freaking want, but don't waste your time and energy buying bad deals because you're setting everyone up for failure, right? So buy great deals using other people's money. Everyone wins in those scenarios. So you can buy as many great deals as you want when you combine it with capital raising. To show you some numbers, I literally just threw this together a minute before this, but just to show you simply, that's what the formatting looks like, crap. But if I'm buying a property traditionally, the normal way someone would with a DSCR loan, buying the same $400,000 property, I'm putting 25% down payment. Most DSCR loans are 20 to 30% down payment. So $100,000 to buy that deal, average rate 7.5%. My mortgage payment is $2,097.64 for that $400,000 loan. Because I'm paying more towards the loan, all the income, all the expenses outside of that, I kept the exact same. Because the loan amount is higher and the down payment is higher, one thing to note is my loan is lower, right? My loan amount is lower because I'm paying more of that up front, right? $400,000 purchase, $100,000 down payment, $300,000 loan at 7.5% interest rate is almost $2,100 a month loan payment. Well, that allows me to get a cash flow year one of around $14,000, which is still really high, right? Because it's a co-living rental, and an 8.2% cash on cash return. So even though my loan amount is lower because the interest rate is higher, my cash flow is lower than it would have been creatively, which we'll get into shortly. Additionally, because my entry cost is higher, my cash on cash return, how hard is my money working for me, is lower than creatively. It's almost like twofold. On top of that, the appreciation is exact same. Same property, same market, properties increasing in value the same, but my debt pay down is massively different. In this instance, it says $10,860. This one says $8,844. Why is that? There might be an error here. I apologize. It's something I should have fixed before. I think it's only accounting for the sub 2 loan, not the seller finance loan at 3%. Regardless, I'm telling you, as a matter of fact, your debt pay down is directly proportional to your interest rate. So if you have a higher interest rate, actually it's inversely proportional. Look, that's too many words. If your interest rate is higher, you're paying your debts down more slowly, right? More is getting paid towards interest instead of paying down your debt. The lower your interest rates, the faster you are paying down your debts because you're wasting less on interest, right? So then the total return on investment, nonetheless, even in this scenario, is much better for the creatively financed property than the traditionally financed property. All right, we'll leave it there. I'll fix some of this stuff later. I'll do a whole deep dive on this by the numbers in the future because I wanted to do another slide comparing traditional rentals to co-living and just explain why literally like the tiniest amount of people are still making traditional rental properties, long-term rentals make sense with high interest rates and high purchase prices. All right, with all that, let's talk about co-living, right? We talked about the numbers. Why is it so great? Why is co-living so great as a rental strategy for an investor? And how when you combine that with creatively financed investments, it gets even better, and showed you some numbers behind it. Let's talk about co-living and why is co-living so important right now? Why is the rent by the room strategy so important right now? Well, housing is extremely unaffordable for the majority of people out there. Simply, housing prices and interest rates have gone up so much, including rental costs, but people's wages have not gone up very much. What that translates to is people who make less than $75,000 a year are paying a large amount of their monthly income towards rent, a large amount of their monthly income towards rent. And that is only going to get worse because if interest rates do come down a little bit, which they might a little bit, housing prices will continue to increase in value massively like they did in early 2020, right? Like if it becomes easier to buy properties because interest rates are lower, housing prices go up because that is an asset that people want to buy now, right? It makes sense to buy them because there's more demand, prices will go up. That's great for people like me who own a lot of real estate. It's a lot worse for people who want to buy a property to live in, people who are trying to rent properties that, someone bought a property and is renting it out, but someone's trying to rent it. Well, they have to charge more for it. And for people who are just starting to get into investments. With all that being said, housing is unaffordable. There's really nothing that's showing it's going to get any better. It's only going to get worse as wages continue to stay fairly stagnant, just barely increasing. And everything around us is increasing in value. Housing prices, interest rates may be flat, may go down a little bit, but inflation is just eating up your dollar all the time. And the last couple of years have been insane. It's still really high. It's still several percent of inflation. With that being said, co-living is one of those core solutions, at least for providing affordable housing with the way that is logical, right? Like I said, in a perfect world, we have a magic wand and the government fairy gives everyone a house and everyone lives nice and has housing, right? But that's not realistic, not in today's day and age. So what can happen is investors realize very quickly, this is a great investment strategy. I'm going to do this. And they're going to provide more of these affordable housing rentals. Because people are in massive demand for lower cost housing, instead of spending 30 plus, 50 plus % sometimes of their paycheck on housing, people are spending like 30 to 50 or more % of their monthly paycheck on housing. That then paying for a car to get to work and insurance and healthcare and food, 100% of their paycheck is gone, or they're getting into debt, worse and worse debt every single month just to barely make ends meet. People have said, okay, enough. I'm done with that. Like they need a place to live because they really don't want to live on the streets. So what is the alternative? The rent by the room strategy allows them to rent a place for a 30 to 40% discount, utilities included, all that stuff. They get their own nice private room in a great location. Maybe they have to, they have to share the kitchen or whatever. More often than not, they're not even using it anyway. But they get to save that extra money and either enjoy their life with it, go travel, go eat out, buy better groceries, order takeout. What I said, travel, just go do fun things with that money or save and invest that for their future. People are realizing that they would much rather do that, especially with the younger generation. With that being said, the market size for the co-living strategy is already almost $8 billion as of 2024. That is a very large market size. But more importantly than it being a large market size is the compounded annual growth rate is 13.5%. That's year over year growth, 13.5% every year. It's compounding for the next 5 years. What that means is it's going to double in the next 5 years, right? That's why I'm saying compounded annual growth rate for anyone who, it's not like you take the number into whatever. That's a very specific metric. What that means is it's going to double in the next 5 years. That's really the big takeaway, which is huge. There's literally no other rental strategy growing nearly nearly not even close to this rate, let alone a fraction of this rate. They're like short-term rentals and all that. They're actually flat, if not declining. Long-term rentals, yeah, they continue to grow, but just such at a steady pace. Co-living, because of its accessibility and the awesome returns for investors and the extreme demand from renters, it's going to continue to grow and will continue to grow. But once it gets too big, just like any rental strategy, just like short-term rentals made a lot of sense early and then don't make a lot of sense now, you don't want to come into this thing later than you have to. If you have the opportunity right now, talking to you guys, people who are watching this 5-10 years from now, hopefully it's still good for you, right? But people who can lock in now and take advantage of this situation and really provide this housing and get significant returns as a reward for it, like this is your real opportunity to really change your entire financial trajectory over the next 1 to 5 years, right? And then the people that get in early always benefit from all the long-term benefits as well. People who bought short-term rentals in 2018, 19, 2020, 2021, they still have really great performing short-term rentals. Those that bought later, not so much. So the combination of limited rentals, cost increases, and the shifting in spending habits is resulting in a massive growth of the co-living strategy. And it's already a pretty large market size, but it's going to double in 5 years. Absurd. And like as I mentioned previously, I went into much more detail. We have massive advantages as early investors. We get to buy these larger properties in better markets, leading to more wealth benefits for us. The appreciation, the debt pay down, and the tax benefits are all increased through the co-living model. On top of that, because we're also getting much higher cash flow and we get to stack a lot more properties because there's less competition right now, we are able to achieve our financial freedom way more quickly and efficiently with less properties than if you go long-term rental or really just competing with other, really with the long-term rental strategy. Combine that with creative financing the way that I do, then it's like the ultimate cheat code. Simply, supply is tight and demand is strong for housing. Costs are up for everything. Wages are stagnant for people who are getting income. And policy is so broken that, like government policy is so broken that they cannot solve these problems. However, they are making the co-living rental strategy much more, much easier for people because they know that this is a solution to something they cannot solve. And just building more high-end houses or $500,000+ houses is not going to solve what is needed for those that are making, $15,000 to $75,000 a year. Building more single-family homes worth $300,000, $400,000, $500,000 is not going to solve this for them. They can't afford it anyway. Interest rates will only make it worse, and prices will continue to increase in value. So building is not the solution. It's more affordable housing, ideally from existing structures. All right, so let me talk about this really awesome opportunity that I have right now, which is the co-living buy box capital raise. What this means is for those who have at least $25,000, we can invest together and go and buy several co-living properties all at once. Every $125,000 that we've raised, we've just surpassed over $400,000, leads to another property, another co-living rental we get to buy together, right? And it's going to be properties that are creatively financed, co-living in major markets that have really solid returns. These are properties that have no less than 15% cash on cash return and a total return on investment of 30%. So we're only buying great deals in great markets, all co-living, and we're leveraging creative financing to make the returns way better. And the cool part about this time, the one and only time I'm ever offering something like this, is not only do we get to own multiple properties together, more importantly, the people who are my partners on this deal, they're actually decision makers. So it's not just, hey, I have this deal, we're going to buy it together, let's raise money for it, right? It's, hey, I have these deals, after we look at the analysis, which of these deals do we want to buy together? They get voting rights. You get to vote. You get to see the analysis, where the deal came from, the analysis, and decide, is this one that we want to co-own together? You got to be part of that entire process. And not only that, because you're an owner of the property, right? The capital partners will receive 45% of total ownership of the entire portfolio of currently 3, about to be 4 properties. Maybe we'll hit 5 or 6 properties by the time it's all said and done. You will get not only the 45% ownership and cash flow, the voting power to be a decision maker and solid returns on your investment, but you get a massive credibility boost as an owner of these properties and getting real world experience of these assets and having the co-ownership. You get to leverage that for your own ability to get more deals, understand how to better structure them, leverage creative financing, maximize your co-living operations, and to be able to raise money for your own investments, right? As I mentioned early on, your own money will always be your bottleneck in your investing journey. It's going to cost you $100,000 to $150,000 to get into your next co-living investment. This $25,000 investment, which is the minimum amount, you can obviously put in more if you want a larger ownership percentage, but that minimum investment amount will get you co-ownership of 4+ co-living properties, giving you the experience and the credibility of your own portfolio so that you can go and raise money from others to then go and buy your own investments as well, right? Like there's literally nothing else like this. The reason why this is the first and last that I'm doing like this is because honestly, it's too time intensive. I don't know how else to say it. It's a lot easier for me to go and raise money the way that I like primarily do, which is, hey, capital partner with $100,000+. You bring this money, I got the deal. Let's buy it. My team will handle everything, as opposed to me involving capital partners in smaller increments, which is already more work, and saying, hey, you guys get to be voters of this and learn throughout the process. That is all more work that takes more of my time. It's not really worth it in the long term to do this over and over again. That's why this is my first and last opportunity of doing this. And the doors are closing on when? August 19th is the last day to get in on this. However much money we raise is the amount of properties we will all collectively own together, right? Those who invest this, the amount of properties we'll own together. I mentioned we just surpassed, we're past 3 properties. We're low 4s. We'll be at maybe 450 shortly. So that'll be close to 4. And then we'll get right to that 4. And if we get more, we get more. Everyone gets to co-own more investments. So additionally, if you are a co-owner already, you've already submitted and you want to invest in this, share it with people that you also think might be interested, because then that means more properties we all get to collectively own together. The ultimate goal, let's say you raise $1 million, that's where I'll absolutely cap it out, is going to be 8 total properties that we all get to co-own. Translates to approximately a $3+ million portfolio, 64 co-living rooms. At the end of the 5-year mark, we're going to hold these properties for 5 years. Each property will individually evaluate, do we as owners want to keep these properties as is? Do you want to refinance and pull some money out and keep the asset, or just sell it and just capture our equity, right? Capture that net worth, that equity I was telling you about. You want to capture that right away and everyone gets paid back and we all got some cool cash flow along the way. So property by property, we'll decide what do we want to do at the end of the 5-year mark. The reason why we're a solid team to work with, I mean, you could really read this for yourself, but I am phenomenal at sourcing deals and analyzing them and just presenting them in such a way that is really useful for those that are making an investment decisions, those that want to potentially partner with us. Giving them the information more straightforward is a massive advantage. You will learn that because you'll be part of that process as we are analyzing deals and presenting them. And there's no shortage of great creatively financed co-living opportunities that I can bring to us to decide to buy together. I have a really phenomenal asset manager who does all of my project management, Leanne, over 20 years of experience doing this kind of stuff. She manages all of our due diligence when we have it under contract, getting all of our quotes for insurance, for renovations, overseeing the renovations of the contractors, setting up the co-living properties, getting the furnishings, designing the layout. That's again, like I said, overseeing the renovations, getting the furnishing set up, organizing with our local boots on the ground team. She hires and trains those guys as well as property management. And we leverage technology as well as local property management for the day-to-day operations and placing tenants. And we have a really awesome financial team between a CFO that I leverage fractionally, a bookkeeper and a CPA, a tax guy. We have a really solid financial team, which you would also get information from. Isaac asked a great question. What link can I use to share? This is the exact link. I just dropped it in there that you can use to share. And I will add that. I know it's not very easy, sorry, but I dropped it in the comments, and I will also share a QR code at the very end of this, and it'll be in the video or something. I don't know how it works. All right. So some potential risks. Every single investment strategy has a risk. Some of the key ones that I want to highlight: zoning and regulations. So many cities do not have very clear guidelines for room by room rentals. However, a lot of states and local municipalities and cities have been changing their laws to be more and more favorable to co-living. Or if they're not changing the laws, they're looking a blind eye to the things that would limit the ability for co-living to work. For example, one of them is occupancy laws. A lot of locations have laws that say, hey, If you have more than 6 people in the same house that are not part of the same family, like that's the limit of different people, different non-familial people you can have in one house, right? A lot of places have stopped that, reversed that, or stopped caring about that as long as you're doing things the right way for the housing that you're providing. Additionally, we only operate in markets that are already favoring co-living or allow us to put in the 6, 7, 8, 9 tenants in that property. So we're just choosing markets that are more favorable. I'm not going to try to convince a state that doesn't want to do it or a city that doesn't want to do it that they should do it. I always go based on where there is demand and it's favorable for us to do so, because that allows me to be more scalable. Why would I waste the time and energy trying to force something to work somewhere it doesn't when I can go buy 5 properties in a location that does with that same time and effort? It's illogical, right? Financing challenges. Well, a lot of lenders out there, if I was to go buy a property to use as co-living, they won't give me a loan based on the co-living income. They'll focus on it based on the long-term rental income. A lot of properties may be great co-living, but won't be great long-term rentals. The issue with that is they won't give you the loan to buy that. I don't care. I buy all my properties creatively financed. I don't deal with banks in that same way. Additionally, there are more lenders out there that do, like there's a few now, a handful, that do provide co-living income loans, like base loans, DSCR loans. And over the next 5 years, when it's time to refinance some of our loans, there's going to be even more of these as this becomes more and more popularized. As I mentioned, it's already large enough where there are lenders offering it, but it's about to double the entire market share over the next 5 years if it doesn't grow even faster than that. Tenant quality control and management. So obviously we have more tenants on the property. There could be more operational management issues, right? More turnover, more potential late payments, roommate conflicts, management headaches, all that crap. Well, luckily for you as a capital partner, you don't have to deal with that. If you're trying to do what I do, well, great. What you need to do is have very strong systems in place to ensure you're only getting the right people who make sense for your properties, have really effective management, leverage technology to as much as you possibly can to minimize those issues before they ever even happen, right? It's up to you as the owner to minimize that to the best of your ability. Does that mean everything will be perfect? Absolutely not, right? But having effective systems, management, and technology on your side allows you to minimize that and then address when things go wrong much more quickly. Additionally, this is a concern I've heard, which I think is somewhat illogical, but market saturation concerns. What if, like short-term rentals, there are too many in one location, right? Like, yeah, that is a concern for certain management strategies, but no one's really saying, well, what if there's too many long-term rentals in a market, right? It's not as much of a concern, primarily because there is such a high demand for this type of housing and there's such a shortage of it available. We are not going to even get close to crossing that path, especially those that are early adopters over the next 1 to 5 years, right? Like we're not even gonna get close to even meeting the current demand, and the demand will continue to increase as wages do not increase much and the economy continues to get worse and worse. In the sense of, I'm not saying we need a economic shutdown or whatever. If there are economic issues, it actually further drives the amount of people looking for lower cost housing, right? So it'd actually be an advantage for the strategy. But I'm saying just as the economy stays as is and just continues progressing with the percentage that wages are increasing is much lower than the way the cost of everything is going up, it'll only continue to get more and more in reality. Not only is demand way in excess of the current supply, but I believe, and the data basically shows that demand will continue to greatly outpace supply. That's just the reality of it. And diluted returns. For this very specific strategy where we're pre-raising the money to then go buy the deals, the longer it takes to find deals, the less time our money is working in those investments. So the goal is to start immediately buying properties. Well, great. I'm used to buying 2 to 4 properties a month, right? I've slowed down at certain periods when it makes sense to not buy a bunch of properties at once. But if we have enough capital to buy 2 to 4 properties, we can get that done within the first month. Buy them, renovate them, furnish them, and get them operational within a month. You get to 5 to 8, will take us 2 months, maybe 3 months total. So it's not going to be much of a difference, especially compared to investing with some operators who are doing certain strategies that just take way longer. For example, building a new house takes a lot longer than it does to buy a property and renovate it. Or if you are less experienced with renovations or furnishings or getting your properties listed, well, that's several months of wasted time right there. We don't have those concerns. We make up, in this particular instance, we make up for all of that by having really great operations and systems and team members. For other investments, when it's like we have the money in the deal right away, well, that's a superpower that we have as well. It provides us a massive, we get things going and renovate it and rent it out as quickly as possible. With that, I really want to leave this as much as possible open for questions, right? I really want as many questions as possible. If you are interested in investing in the Super Investor Co-Living Club, you can scan this QR code. I'm also going to drop the link one more time here, and I'll drop it on Instagram as well, since I do always forget my Instagram friends. I apologize. So, and if you don't know that you can do this, you can actually screenshot this if you're watching on your phone, and then go to the photo and then hold the QR code and then open up that link. Very advantageous if you didn't know that. Sometimes it's harder to scan, especially if you're on your phone. Screenshot it, then you click the link after, like hold the QR code and it'll get you there. I want to very quickly show you how easy it is to join this investment if you're interested. I'm going to stop sharing for just 1 second. I'm going to open this up. Okay, present. So we're in the Super Investors Co-Living Club. Oh, look at that. So we're already at 465,000 of the 500. So if we only get to around 500, this is the last $35,000 available to lend. So if you want to get in, this is literally your last chance because the minimum investment is $25,000. If we exceed $500,000, unless we get close to $625,000, as I show here, unless we get close to this, we're going to just refund those final people back their money, right? So if you want to get in, this is your last chance to at least guarantee that you're part of the 4 co-living rentals. Even if you only have the 25K, cannot do 35, get in like now. Otherwise, once this is hit, it's hit. Like there's nothing I could do about that. We're not going to ask anyone else to change because you waited too long, right? The last day to join this project is going to be Monday, August 18th. That's how long I'll keep it open. And then I'm going to be in Alaska, rafting, camping. I have no internet. None of that will be done. So there's no questions, no anything. You have questions, you come in here, you click the link I provide you, you post your questions, and I will answer everything I possibly can for you. So ask your questions, go in the comments, ask your questions. I'm more than happy to answer anything and everything. I've done plenty of these videos, sharing this information. I'm quite literally telling you, this is the only and last one I am doing like this because it is honestly more work than it's worth. I don't know how else to phrase it. I can just do real estate way more easy than this. This is a big part of my goal of helping 10,000 or more real estate investors achieve financial freedom through co-living. This is a big part of that because every person involved here, but currently we have 14. It'll be 15, 16, 17 by the time it's done. I expect you all, I'd be disappointed if you didn't take this investment opportunity, learn as much as you can, get solid returns, and then leverage that to go and build your own co-living portfolio to become financially free. Go raise capital, go scale your portfolio, help other people. And those 17 people are going to then teach another 50 people or 100 people. And those people are going to help more people, right? This is a big part of that ripple effect. This is the third project I've done on fractional, somewhat like this. However, those ones we already had the deals. Very different than this one where we're going to actively choose the deals that we are buying together. It's literally so sick. I wish I had this opportunity in the beginning. There's like literally, I don't know. I don't even feel like I'm being hyperbolic. I just don't think there's literally anything else like this. Probably because it's just more work than it's worth for a lot of people. And that's the reality of it. So for those of you that want to be part of this, want to leverage the portfolio, want to scale to financial freedom, especially through co-living and creative financing, this is your ultimate cheat code. I understand that is not possible for everyone because you may not have the financial resources to invest $25,000, right? Once again, you're not paying me for education. You are investing to own this portfolio. You just also get education. And every single person that actually invests so I've changed this. I'm going to allow every single person that makes an investment of 25K, they are going to, oh, look at that. If I refresh, we're at 490, right? Like we're literally right there. Thanks, Steve. Steve said, we are at 490 right now. Thank you, brother. I think I see your head right there. So this literally is your last chance, actually, because of that, because we're last chance unless we get closer to the 625, of course. But every single person that's an investor that invests in this deal, I'm hosting a 2-day workshop in San Diego, California, September 20th and 2021, all on co-living. You're going to learn literally A to Z. acquisitions, analysis, renovations, furnishings, everything. You're going to get my calculator for analysis. You're going to get my templates and spreadsheets for furnishings and all these other things, all the tools and resources you could possibly need for co-living. You get a free ticket to that event. That's $24.97 in value. You get that. You get a free ticket as an investor because I'm going to help you leverage this co-ownership to then be able to go and scale your own portfolio. That's my goal. I don't necessarily need money in small increments from people like in this setting to then be able to build portfolios like this. I can just do this for my capital partners that have hundreds of thousands, millions of dollars to then be able to fund deals like this. That's the way the majority of my deals are. But for those that have lower capital but are looking to grow and scale and become financially free through real estate investing the same way I have, I want to provide you so much freaking value, which is why I'm going above and beyond as much as I possibly can. But it is to the point in which I have a baby number 2 coming in November. I'm checked out. I'm done. Like I am done in the sense of I can't create unnecessarily more work for myself. I've already got a lot of work on things that I really care about and enjoy. This I do, but I can't just offer project after project after project like this. It's just a lot of work and it's unnecessary work for my position. It just isn't needed for me to do stuff like this. But I love it and I want to help you guys. This is your chance to get in on that. Cool. With that being said, it's very simple. If you want to do it, you click that link, you come and click complete deposit or whatever it looks like, start deposit. You choose, all you put in today is a 2% deposit. So if you're looking at investing, you want to invest $25,000, you lock in your spot with a $500 deposit. Then in the next couple of weeks is when you put in the rest of your funds. So if you have that, you could do it through a debit card, a credit card, whatever you want to do. It does not have to be the same exact way you're going to fund your the same exact way you're going to fund the full amount, the full 25K. You just lock in your spot with that $500K deposit for a 25K investment. But please, that is in theory non-refundable. So if you're not going to be able to perform, don't do that. You'll be wasting everyone's time and you're going to lose that money. I, in good faith, anytime some situation has come up, I've always allowed them to refund the funds, but you're going to be putting everyone at a massive disadvantage because if you're not serious about moving forward, you're going to take someone else's spot. So please don't do that. If you're serious, lock in your deposit. Let's get rocking and rolling. Let's help you grow and scale your investment portfolio. All right, with that, let me answer some freaking questions like I said I was going to do. Actually, what I can do is continue to share this screen for a little bit while I answer questions. So I'll share this. All right, so questions. Man, you guys, what do I answer things too well? There's no questions, or am I just not looking at where questions are being asked? Someone's trying to reach out to me, check my inbox. You know, you're probably trying to sell me a digital product or something. Very cool. All right, I don't think there's anything on Instagram. Let's go. Okay, so Lorda said, what does it mean as an investor to show ownership of a portfolio? What opportunities will open up to me? Great question. So when you think about this. If you are a brand new real estate investor, or even if you're not a brand new real estate investor, but you're a real estate investor who's been learning, but you have 0 real estate versus someone who has 5 properties, right? Even if it's co-ownership, 5 properties, and they've shown, hey, I have no real estate. I've kind of done nothing but learn up to this point. Or the person that has fractional ownership of 5 properties, they invested, they learned, they worked with someone, they fractionally own, right? They co-own multiple properties of the strategy they're looking to raise money on. Who would a capital partner rather invest with? The person with no real estate or the person that has multiple properties under their belt, even though it's as a co-owner, but they went above and beyond, invested in the strategy they wanted, learned, got experience, co-ownership, returns, education, all that good stuff. Who would someone rather invest with? That's what that means, right, Lourdes? What does that mean? You're setting yourself up much more favorably to be able to raise capital from other investors because you have more experience, more. It's one thing to learn from books. It's one thing to learn from a course. It's one thing to do that kind of stuff. It's another thing to actually be involved with these deals and learn through the deals and actually have ownership of deals. Even if you start off as a capital partner, it's actually a cheat code. Hey, yeah, so what I was doing is I got very intrigued by the strategy. The first thing I decided to do was invest with someone else who was way ahead of me so I can learn directly through them. We co-owned, we decided to buy properties together so that I can go and so I can own these assets, learn more, and then so I can go and grow my own portfolio. Well, now you're asking them to do the same thing with you. You're giving them their journey the journey they want to go on is exactly what you did. That's even more boost, even more benefit to be able to raise capital, especially with those that are investors looking to learn this stuff so they can go and grow their own portfolio, like a lot of you guys who are doing this with me. So all of that, having more ownership of real estate is a massive advantage when it comes to raising money, even just buying more deals, being taken more seriously, learning way more, but also raising money for those deals. Especially when you tie in the hero's journey. This is your hero's journey. You were the investor, the partner the first time. You brought the money, you learned, you got co-ownership. Now you're asking other people to do the same with your investments so they can do the same thing that you did. You're showing them proof of what you've done and why now how you're scaling it. Not just through your own experience and portfolio, but you're showing them, I did the same thing you're doing. This is how I know how best to serve you. And if your goal when it comes to capital raising is how can I best serve my capital partners? Cheat code. I don't know if people say that kind of stuff often, but if your goal isn't how, like instead of how can I buy the most amount of deals or this or that, but it's how can I best serve my capital partners? It'll be your massive advantage, your massive cheat code. You're going to spend more time and energy, not just on buying any and every property. You're going to focus on the best properties with the best returns, with the least amount of risk, and present them effectively to your capital partners. You're going to provide them more value than just the returns. That all makes your life much easier when it comes to raising capital. Think from that mentality always. And when you're structuring creatively, finance deals, the same thing. How best can I serve the seller? Does that mean you're always going to give them the most amount of money or whatever? Not necessarily, but you're going to identify what is it that they want more, like above everything else, above anything else. What are the things that they want? How can I provide that to them? Matt Powell, go Army. Go Army. Let's go. Guess I should hit you with a hua. All right, let's go. Okay, people are talking about deals. Good. Communicate your deals together. I love that. Someone asked about ground up co-living. Yeah, I know a few people that do ground up co-living. It's not at all my strategy. I think it's less scalable. I think instead of putting $300,000 or more to buy one property and wait several months, I'd rather buy 3 or more properties and get them done instantly and get my money for myself and my partners instantly. That's my thought on it. Not to say there's anything wrong with it. It's all different investment strategies, to each their own. Do whatever makes the most sense for you. But on top of that, I can buy existing deals creatively financed with lower interest rates. All those reasons, like literally all those reasons. I'm not trying to also assume something will work. I'm literally just leveraging what is already there. Okay. People are talking about analyzing deals. Perfect. B2 Vaughn BC. What's the expected monthly cash flow for a 50K investment? Also, are we going to form an LLC together that holds title, or what will the co-ownership look like? Perfect. Let's talk about co-ownership first. So what it will look like is we will have an LLC that is owned by our capital partners and my business, right? We will co-own a new LLC that is owned by capital partners and my, right? That's how we own it. And that one LLC that is owned by both of us will then be the one on title for those properties. So we all have ownership and we're all on, the LLC is on title and you're on ownership of the LLC that is on title. Very important. Make sure that is the case for what you are doing. Handles that piece. Monthly cash flow for a 50K investment. All right. So the best way to think about that is the cheat code, for those of you who don't know, is cash on cash return equals your cash flow that you're receiving, right? Your annual cash flow divided by your entry cost. Okay. So if you were just to take the 6.8% cash on cash return and multiply it by how much you're investing, that'll tell your annual cash flow. So what that means is, let me 0.068 times, I guess I could show you on a spreadsheet. Maybe that'd be better. Just going to be my deal analysis spreadsheet, but it's going to just be somewhere random instead. Why is this not copying? There we go. So I'm going to share here instead. I'm just going to go all the way down to the bottom, somewhere chill. All right. Let's just go. Yeah, it's fine. Equals 0.068. Are you seeing this? Make sure you're seeing this. 0.068, right? 6.8% cash on cash return times, let's say, $50,000. is, right, you're taking your 6%, right, and you're turning it into a decimal. So dividing that by 100, multiplied by your investment amount is $3,400 of cash flow for the year. Take that and you divide that by, typically we always do quarterly payouts. You can divide that by 4. So it's an $850 a quarter return on your money, if that makes sense. That's what you're getting for a $50,000 investment. If it's $25,000, take that. Obviously, the numbers are still, the percentage is still the same, but it's specifically the dollar amount they're receiving. The thing to understand about that all is that's one of the many benefits, right? That is the one benefit from cash flow. Well, because you're a co-owner, you're getting over 20% average return on investment because you also get appreciation. You get tax benefits that come from interest payments and depreciation, and you get debt pay down benefits, all adding to your wealth. That's why you cannot compare being a private money partner or a co-owner apples to apples with being a private money lender. You can tend to get higher return, the 12% as a PML versus the 6.8% as a co-owner, right? From just the dollar amount that hits your bank account. But the differentiator is all of these other benefits that are adding to your wealth that greatly exceed and only get better with time, where it's fixed with a private money lender. It's the same interest rate, only get better with time when you account for the total return on investment. So for example, if you were to do a private money lender, it will always be 12% every single year. Well, that increases over this 5-year period, like 12%, 12%, 12%. But this massively increases over 5 years, right? The return on investment and the cash on cash return. On top of that, if you're a private money lender, that doesn't do you a lot of good for the main thing here. You wouldn't be part of voting power or deals that are required. You would not get a credibility boost or real world experience. You just be a lender, which is great. I raise money from lenders all the time, and I go buy deals and I do the burst strategy or, leverage creative for those kinds of deals sometimes as well. But you wouldn't get all these other benefits that you get as a co-owner. That's why this is the last one that I'm going to be doing is co-ownership like this. Hopefully that answers your questions, B2 Van BC. Hopefully you're still on there on Instagram. Cool. All right. So November 29th. I don't know what that was. November 29th. Kathleen, yeah, give me context. I'm totally lost here. Oh, my baby due date. Right before Thanksgiving, a few days before, maybe like the 24th or something like that. Obviously our baby girl was a few weeks early, so I don't really, that's not like, I know that's not set in stone. All right, let's see what else is there. I got time for another question or two if you guys have it. Oh, deal analysis. How are you estimating rehab costs? Estimated square footage, 35 to 50. What's the best way? I will talk about that more when it comes to our super investors. You will get that. For the time being, the way that I present it in the deal analysis calculator is more on a, less on a square footage basis. It's more on a rooms that you're adding and furnishings basis. So for example, for every room that we're adding, we estimate around $6,500 a month, or $6,500 total to convert a room. To convert like a living room and closing off 1 or 2 walls and adding a door is around that cost. Obviously, if you're only doing 1, it's way more costly. If you're doing 2, 3, 4, it's a lot less costly per room, right? And then furnishing costs, we estimate $1,200 based on the total number of rooms. So these 4 that we've added, plus the 4 that was there, that equates to $9,600. But rooms don't cost us $1,200 to furnish. It costs us less than that, but that gives us wiggle room to then furnish the common areas and outdoor space and that kind of stuff as well. That's all adding to your entry costs here. The dollar per square foot, that's another model. That's more for renovating an actual house, like renovating it, replacing flooring and this and that, not just adding non-load bearing walls to convert a dining room, an office, a living room into a bedroom. Different costs there. And every single market is different. And it depends on the cost of materials and labor, which is going to be market dependent. It's going to be timing dependent. This is a pretty fair assumption based on my own previous in multiple markets. But this is only good for when you're initially analyzing deals. What you then have to do is truly understand your markets and understand what does it actually cost you in those markets. And more importantly, do what I do, which is instantly get contractors there to give you an actual quote. This is to help you make a decision should you move forward with trying to put this property under contract or not. You need to get a contractor in there to actually give you the real number, right? Without the real number, it's all, you're doing your best to estimate, but that should not be your hard and fast, like that should not be your sole decision-making on what's the renovation cost. You need to get a contractor in there quickly, and it's going to be solid, to get you a realistic quote on that, ideally itemized. All right. Steve asked, what if I bring a deal to the group that the group buys? Steve, we will talk about that for super investors. I think that's the only people who are going to get that benefit. So we'll leave that for super investors. Honestly, I got 4 great deals right now lined up that we can buy within the next, as soon as this thing closes, we can go and buy this like instantly. We can go buy several deals basically instantly. All right, y'all. With that, thank you so much. This recording will be on YouTube. If you have any questions, you let me know. Please do me a solid and connect with me on Instagram. If you're not already, definitely connect with me on YouTube. I'd appreciate that. And I'll drop those in there because I try to provide a lot of freaking free value. If you're watching this on Instagram, you don't need to connect with me. You're already there. If you're watching this on YouTube, well, you're good too. And I also have a free community with free education tools, calculators, all this good stuff in my free Wealth Through Real Estate School community. I just dropped that comment in there as well. I'll share that right here. School, Wealth-REI. Great. You type that in, you can go in there, free courses, tools, all that kind of stuff. I'm really trying to help as many of you guys succeed as possible. I know not everyone has $25K to invest in. That's the deal. If you don't do it. Don't freaking stretch yourself thin. You should never invest money that you cannot comfortably invest. That's not how investing works. For those of you that need to start learning how to understand the basics of real estate investing, need to understand the basics of creative financing, buying deals, how they benefit you, financial freedom overall, how you can get active income through bird dogging, capital connecting. I give all that stuff away for free. Take advantage of that, build your capital stack, get into awesome investment opportunities like this one that will then not just give you returns that are solid, but also help you grow and scale your portfolio. That is what you should be focused on, especially early on with as little as $25K investment. If you like my partners who have hundreds of thousands, $500,000, $1 million+ to deploy in investments, yeah, then maybe hyper focus specifically on who's giving me the highest returns with the least amount of risk, right? It's a balancing act. Some people will say 50% and they can't perform, right? You lose all your money. But it's a balancing act. But if you have 25 to 50K, getting an extra 1% cash on cash return is not going to change your life. What's going to change your life is these opportunities of co-ownership and education to then go and do the same thing over and over again for yourself. This is an investment, not just from the returns on the deal, but how you're going to leverage this to then grow and scale your portfolio. If the only thing you are focused on is quite literally, what is my cash on cash return? This may not be the right investment for you. If your goal is, I want to leverage this to build my credibility, my knowledge, my experience, and get solid returns, also, I can then go and scale my own portfolio to then become financially free through 10, 20 properties or more. This is what this solution is for right now. And that's also why it's the last time I'm doing it, because it's just too much work for me. Of course, Isaac, I appreciate you, brother. I'm looking forward. Thank you for being my partner on this deal. I'm looking forward to seeing you in San Diego if you're available. So I'll send tickets out to everyone who's me hopping in now. So everyone who's already invested, I got you guys covered. Colleen, I'm very excited to work with you guys and you and Patrick as partners on this deal, and then see you guys in San Diego as well. I know you're locked in. We're even staying at our beautiful short-term rental that we have down there. We're doing something really cool, providing a mastermind session at, let me see if I can look at this freaking property down. And these aren't even the most up-to-date photos. We're adding a movie room in there. We're adding this is a luxury. This is one of my short-term rentals. When I say do short-term rentals, I like, this is what I'm talking about. If you're going to do short-term rentals, you got to go like, I'm not telling everyone they should. I don't think most people should do it, especially now. I bought this early with very little money in, great interest rate, a couple of years ago, 0%, like all this awesome stuff. No money, like it's freaking phenomenal. They're going to be staying at, we have several people and a couple rooms available for people to stay at this beautiful, beautiful house that I have in San Diego. We call it let's go to the end. This is the Helix Castle, 2 hot tubs, movie room in the garage with like movie theater, movie theater, karaoke in there, fitness center. We got, all that kind of stuff. People can cold plunge, whatever they want to do there. Beautiful location right next to the venue for where we're hosting the event. Bunch of rooms, multiple hot tubs. This game room, these are outdated photos. We got a beautiful pool table. The room's like basically blacked out, speakeasy style. This is a hidden room. This is a freaking hidden room. You like don't even know about this till you get there and you pop through that doorway. Beautiful spiral staircase. This is one of those luxury, amazing, incredible properties. I love this one as one of my short-term rentals. This is one of the only properties that I will own like this for that are short-term rental. It provides me massive wealth benefits because in San Diego, it's already increased like $300,000 since I bought it in appreciation. We've paid down at least $100,000 in debt roughly because of low interest rates, renovated it, driving in some solid cash flow. This backyard's getting redone. I'm building it out more. I'm expanding the concrete, getting rid of this fire pit, replacing it with a beautiful fire pit table. This is what you want your portfolio to look like eventually, right? But you got to get there through some cash flow. I didn't buy a deal like this until I got $10,000+ a month of cash flow coming in, that then my portfolio could withstand investment opportunities like this in the volatility that comes with expensive properties sometimes. All right. Cool, y'all. Love this place. Look at these freaking bathtubs. People are going to be taking baths in this thing. Amazing. Look at that. Decked out. And we're going crazy with the design. We're going to paint accent walls, replace all the, just enhance all the artwork, everything. It's kind of been drab and we've allowed the house itself to kind of be the main feature. Now we're going all in on the design and the amenities with the movie theater and all this cool stuff. The game room's always been a cool hit. We're making that even better. So yeah, that's all. Just want to share that, just to share that with you guys. Appreciate you guys. Oh, Isaac, you were at the golden ticket. Oh, brother, even better, dude. I love you. Yeah, I love that because Isaac heard my mentor Pace, Jamil, Matt Sorensen, all these guys say, dang, this is a freaking phenomenal investment opportunity. Co-living is the perfect time. It's only like, there's still so much, like you heard all the praises they said, not to my own horn, but about me and my experience with co-living and the way I've been able to scale my portfolio, not just talk about things like a lot of people do, but actually do it. I never dubbed myself the co-living king or whatever people love nicknames and shit. I care about owning assets that actually provide real results. And that's what's gotten me to the place that I've gotten to. Everything else is emotional and it's like feelings, and they like to feel good because they have a nickname. It's like, who cares? What are you doing? How are you helping people? That's what really matters. Do you have solid returns? Do you not? Those are the only things that matter. Focus on building a portfolio, eating right, taking care of your family, enjoying your life. And a big part of that is becoming financially free. Honestly, no one here wants to work, or I don't think you're sitting here spending your time and energy watching this because you want to work for the next 40+ years to help your CEO buy another boat. Your goal is to get $10,000, $20,000+ a month coming in and never have to work for someone else ever again if you choose to work, because it's things you care about and enjoy doing. I want that for you. That's like the most important thing I could ever ask. Like, I will tell you quite literally though, I don't necessarily want that for everyone. It's not because I'm selfish. It's not. It's because I don't think most people are willing to put in the work to then deserve that. I think to live a life like that, you're either handed it down, you're given a silver spoon from someone above you, which I didn't have, and the majority of people that I know literally don't have these silver spoons. They don't come from money. I'm first generation American, super freaking poor as a kid, raised by a single mom, working multiple jobs, barely minimum wage. Like, I get it. So we have to create that. For those of us that create this, you deserve that lifestyle that comes with it. You deserve to not have to work for someone else, definitely, and enjoy your life focusing on the things that you truly care about. I'm a simple guy. I'm here in Monterey. We were in Carmel looking at Car Week and all that. Not even, like, it was our 13th year anniversary, but there's all these fancy cars and all these things and country clubs and all this. That's cool. Like, if you want that, I want that for you. I don't care about any of that crap. I care about having the time and energy to spend with my family, especially my young and growing family right now, kids, another one on the way. That matters to me. Traveling, enjoying great foods, buying healthy foods, having time to work out, being less stressed out. I had a masseuse come in right before this, like taking care of my physical health, my mental health, enjoying my family, experiencing this world. That's what I care about, right? And I deserve that because I worked really hard over the last decade plus for this. And I want those that are also willing to work hard. I want to help you as much as I can. That is why I do all of this stuff that I do. 98% of it being totally free. Then I have investment opportunities like this one. And then I have paid mentorship and coaching for those who are looking to fast track, really streamline their path to that financial freedom. With that, I've talked way more than I wanted to. Thank you guys. I appreciate you guys. Thank you. For those that are partners on the deal, I look forward to owning 4 or 5 properties with you guys. Thank you. And I'll see a lot of you guys in San Diego. Peace.
All my young